Hello and welcome to another episode of the Fintech Show. This time round, we're taking a look at real-life use cases of open banking. Yes, you heard correctly. We're sitting down with HSBC and consumer credit reporting agency Equifax, whose partnership has given life to the world's first live open banking credit application solution. They talk to us about the value of modern data and the importance of its utilization.
You've clearly identified a strong credit risk use case through your work with personal loans and HSBC. Do you see any other value with the transactional data?
We see a host of benefits of open banking insights. The main ones will be confirmation of salary and disposable income, thereby removing the manual process of processing wage slips and bank statements. Allowing access to credit to thin file customers, such as people who are new to country or young adults with minimal credit footprint, is another big advantage. Better authentication using digital ID verification, thereby reducing the possibility of fraud at the point of application. Transactional alerts are to identify specific account transactions which a client or a business would want to be aware of. There are several other use cases across the customer life cycle, which we are already exploring with some of our other clients.
Do you think exploring this data allows for more financial inclusion? And by that I mean people who previously, just because of bureaucratic reasons, weren't able to get a personal loan are now able to because of the technology has freed up that bureaucracy.
I think PSD2 by design is anyway designed to make sure that customers have access to better products and services, and also it is more competitive in terms of what can be offered by banks who you're not currently a customer of. So by that definition, yes, open banking definitely does achieve that.
So I think the opportunities are multiple. We have always viewed open banking in a front-footed fashion. We embraced open banking even before it became a law. By that I mean technologically we were clear that we have to create APIs and offer those APIs into the ecosystem at some stage. But in terms of creating customer value from open banking, we were the first bank to put a solution out in the market in the form of connected money, which was at that stage the only example of an incumbent bank trying to do account aggregation. When it comes to digital lending, we have been using open banking data, ingesting open banking data to improve our affordability decisioning on customers. And we have seen a 30% increase in our ability to offer loans to customers when we have access to their open banking transaction data from non-HSBC accounts. And in addition, we are using open banking to do just automation of customer journeys, to take customer burden out. Banks often have a habit of asking questions repeatedly when those could be pulled through APIs. So that's what we are doing with open banking.
So you learned a lot from open banking at Equifax. Do you think that some of the clients that you're working with learned a lot in terms of, aha, this is actually a massive opportunity for us as opposed to an inconvenience of a new regulation?
So as with any change in regulation, there is a slight bit of apprehension on the part of our clients, which is natural. However, because a client can see that they can actually treat a new customer as an existing customer due to the additional information that they have as a result of the transactional data, this was seen as a massive opportunity, which is why a lot of our clients have accelerated the process of implementing open banking in their customer journey.
So I think open banking ultimately is about exchange of data seamlessly. If you look at customers who are non-primary banked, so not HSBC customers, and they have accounts elsewhere, so call them thin file customers, for instance. When they are applying for a personal loan on HSBC, we now use a consent solution digitally and pull their non-HSBC current account data, which then goes to an automated sort of categorization and underwriting process, which then helps us make calls around customers' affordability as well as their credit worthiness in conjunction with the bureau data, which we can easily pull for any customer.
Next, our interviewees discuss their partnerships and their approach to data utilization in the future.
For an organisation, an institution like HSBC, obviously you have your in-house innovation crews, but do you look to collaborate, do you look to work with other partners to kind of create the best value proposition for your customers going forward, especially in the lending space?
Oh yeah, sure. I mean, all the time. I have already mentioned the open banking testing we have done, which was done with a third party, account score on the consent piece. working with Equifax as well. And then on credit decisioning, we are working with a company that specializes in machine learning models to find pockets of opportunity around lending. And then we are exploring opportunities around new forms of lending, whether they're point of sale or buy now, pay later. We have to tread very carefully when it comes to that sort of model, because I personally fear that could create a new debt trap, the way that is growing. So we are proceeding cautiously when it comes to that sort of model, but in all these areas we are actively working with partners.
It's a bit unusual for HSBC to want to be the first in the market when it comes to obviously utilising open banking in that way. What was some of the motivations when working with HSBC to make sure that they're the first there in the market?
I think for any company, it is about having that competitive edge, doing something new and innovative. So a lot of what has happened with open banking is it stemmed out of the PSD2 regulation. And HSBC were proactive enough to go ahead and make sure that they are first to market with something which is completely new in the industry.
And with that in mind, what's been the effect this has had on HSBC?
So in terms of HSBC, what we've already seen is the automation of a lot of the referral processes. So referral processes is where there is a manual underwriter going through each transactions. We call it the man with the highlighter, who goes through each and every transaction, which causes unnecessary delays in the processing of information. What account banking brings to this aspect of the work is it just makes sure that a lot of the referral decisions are automated and they are also consistent, because we provide categorization as one of the key services of the open banking solution.
Well, if HSBC hadn't signed up with this particular process, how would they have done it in the past? What would be kind of the manual paper way of doing it?
So the way it has worked historically throughout the customer journey, as it were, has been for a referral journey, a customer would be required to supply paper statements, which requires a lot of time for the customer to go request it. There's a lag in between the banks receiving the data and sending it back to the customer, and then the customer sending it to us. So that itself is a significant delay, and following that process, it relies on an individual to not only go through and make sure that they understand the transactions and make sure they're relevant, but also make sure that they start categorizing the information and it is also consistent and standardized in the process. So what open banking is bringing to the table is the consistency and stability, and also the speed in processing such important decisions to give the company a competitive edge.
Lending at the end of the day comes down to three main data signals, data problems, if you like. The first one is around digital identity, which I'm sure we can get into. The tech is there to solve it. Do we have the political will, the ability to work together to create decentralized digital identity? That's a longer discussion. The second then is affordability. Could this person afford a lending offer that I, as a lender, might want to make? And the third one is the credit worthiness. And I think the last two are very almost backward-looking indicators in lending thus far. I mean, everyone goes and pulls some sort of data from a bureau and makes decisions on both affordability and credit worthiness. With digital and the ability of APIs to move data around seamlessly, external news signals, transactional data and enrichment of transactional data and finding new signals from that does create opportunities to expand credit to a larger population, even holding your risk appetite constant, which matters to a large bank like HSBC. So in this area, for example, we are beginning to frame a few very innovative hypotheses, if you like, and test them. I'll give you one, which seems very obvious to me, but we are testing it now. If there is a customer who's mobile, digitally engaged, and has a habit of checking their balance repeatedly, could that be a good signal of that customer's credit worthiness? Go to our models around default, incorporate that. So I think that's a very interesting signal which we are trying to test. Then machine learning creates a new set of opportunities around decisioning, and we are working on applying some machine learning models. The challenge there is they cannot be black box, so we are trying to convert them and then apply them to see if there are new signals which emerge around both affordability and credit worthiness. Back to open banking, and open banking creates a new sort of infrastructure, extensible infrastructure, which means you can then ingest new sources of data, both around identity and then around affordability and creditworthiness. And that's the sort of experimentation we are doing now. And I think there are others who are doing that now as well. And there are a few innovative players who emerged whose raison d'etre is to find better models using machine learning.
What is Equifax's vision of using open banking data in the future?
Firstly, it's important to understand that open banking cannot provide all the answers. Therefore, it is important to use other information such as bureau data to build a complete picture of the customer. So this will improve financial accessibility, consumer choice, and customer experience. The services that will continue to thrive are the ones that give the customer better transparency and control. Customers need a compelling reason to share the data, and it is up to the business to make sure that they enforce a strong value exchange to ensure that this happens. In terms of the data itself, it is being enhanced by the inclusion of further lenders and banks, such as credit card companies who are currently not part of the open banking data structure, but they will be soon. Some of the latest enhancements have been the introduction of the app-to-app integration and the biometrics that have been introduced. So this has made the customer journey seamless as possible. So in the past, it was very limited information. So as you can imagine, there was a lot less online banking. It was more cash transactions and debit card transactions, and even those information was not made available to the potential lender. However, now there is a lot of extra information that a customer can provide and a business can use to make sure that it's a better decision for the customer.
So how many data, how have the data points J-curved completely? What sort of information has open banking allowed us to access all of this bizarre data?
So even with open banking, historically it has been the transaction data from a current account that would be used to enable a customer decision. However, at the moment what we are seeing is the data itself is being enriched by more banks making their data available via the open banking channel. But also we have new types of data available, such as credit card data, prepaid accounts, etc., all of which is giving a more complete view of the customer itself.
Because I hear things like phone data of how somebody holds their phone has an impact into terms of whether they're likely to drop it, which then has a knock-on effect of insurance. There's all sorts of kind of 1,000, 10,000 data points which can then have an impact on the profile of that individual. How extreme do you think that could go?
So it is all about making sure that there is the right balance of what data is being looked at versus what data is being used for decisioning, such as someone who has missed a single payment may not necessarily mean that they will continue to miss payments in the future. Of course, it needs to be monitored. It is important to ensure that any kind of data which is used for decisioning does not treat the customer unfairly. One of the main advantages of open banking data is that the customer is always in control. So it relies on the explicit consent of the customer to make some of the data available, and they are in complete control to make sure that they are only given access to the information that they think is relevant for that application.
Thanks for joining us. That's all for today, I'm afraid, but be sure to check out the rest of the series and much more over at fintech.finance. See you later.